All right. Good afternoon, everyone. Hope you guys are doing well. This video is being recorded Friday, April 12th, after market close. We got a wild week. We got a lot of material to go through, guys. Strap in here. So, first off, next week's important information or data coming up, as you know. Earnings season is going to get started. First thing first, Monday, no data. All right. Pretty much just Logan speaking in the afternoon. Housing starts, not really much of a big deal. Jefferson, Wednesday, 20-year bond flood of Fed speakers. And then in addition, on Thursday, you have jobless claims, a bunch more Fed speakers. And then, of course, earnings from Netflix and TSM, which are the two major big names going into to kick off this earnings season. And of course, the week following is going to be your Amazon, Meta's, Google's, and also Tesla is set to report and Friday close week. So given the light that there's not much big data going into next week, I do think that we're due for a bounce here, and I'll show you why in just a few. But of course, the big news of the week, besides the hotter than expected CPI, softer PPI, and the core PPI, is of course the nation of Iran initiating attacks on Israel. All right. Don't ask me what are all the details. I haven't kept up with all the news and all the missiles, etc., going back and forth. And to be quite honest with you, maybe the situation gets a little bit worse over the weekend. So we're going to be prepared for that. Now, I do have a plan set up for next week, and I'll show you that. And this is going to be a scenario where there's going to be no U.S. Move or U.S. troops movements on the ground or anything like that. During the first initial phase of any major nation conflict, war, whatever you want to call it, there's always going to be a gut reaction from the market. And generally speaking, it'll somehow by next week or even Monday, it'll be overdone and it'll be time to bounce. All right. If you guys remember back when Ukraine or Russia started invading Ukraine, the same reaction wasn't good, right? You had so many clippings and news articles all over FinTwit and everybody becoming a war expert, right? And all of a sudden, the situation gets worse and worse. But eventually the noise starts drowning out. The media starts moving on to different avenues and different news, etc. This won't be in the news forever, guys. So, this thing is definitely worrisome. I will be the first to admit, for the future and the global peace, right, throughout the world. A lot has to do with Israel, the nation of Israel. So, definitely be prayerful, right, and hope this thing actually resolves itself some way diplomatically. But let's go ahead and jump into the plan for going into next week. So, as you can see, the SPY closed right above 510, lower close to 511. S&P futures, S&P 500 down about 1.6% on the week. And so you take a look at the weekly chart here on SPY, and it doesn't look great, right? We have a rising wedge about 2 weeks ago that actually broke down. The market did its best to kind of stay within that wedge or stay above that trend line. And unfortunately, today or this week, it just ended pretty bloody, right? But we, to be quite honest, we are just about 30 points on the index below last week's low. So we are making lower highs for last 2 weeks and lower lows so far. All right. And going into this next week, and here's the plan so far, is that you see this trend line here. It has held at the end of the day, and in addition to that, it's the 50-day moving average. 50-day moving average, and that's just going to be very, very should be pretty good support going into the week, given that maybe over the weekend things calm down a little bit, or the things, or at least the situation in Israel doesn't get worse. All right, the market likes to price in the most likely worst case scenario, and it's already starting to do that. So therefore, you had a pretty red day on the market, obviously. But guess what, folks? I mean, yes, you had a red day, but look at what's happening if we zoom out a little bit on the daily stochastics. All right, now of course, sentiment obviously is trumps, okay, or price action trumps the indicators, but we are starting to get oversold on the daily stochastic. And this is the first time that we've done a reset since January. And this was the October lows reset here. All right. So major area to watch next week. And also we are the most oversold since October lows on the CCI as well. All right. So this is starting to look a little bit more bullish. Of course, there could be a little bit extra downside. And I think on Monday, what you're likely going to see is probably, and I'll tell you now, is that we're going to hit about 508. All right. We hit about 509.08. So barely held on to the 508 area, above the 508 area. Now, this is your critical support area from the month of March, just last month, right? And you can see that throughout the month of March, we pretty much held the 508 to the 505. On Monday morning, I do expect a little bit more fear, possibly a gap down to the 507 to the 508. This will be my downside, and that would be my low of the week estimate for going into the following week. My upside target is we're going to see a snapback to 516 to actually create a right shoulder. You can see on the daily chart now, we're starting to develop there's going to be a left and right shoulder, and I'll show you a little bit more here as we zoom into the 30-minute chart. Okay, so here we go. All right, so you can see that this is going to be your head. All right. And your right shoulder is probably right here at 516. All right, so this is the head. This is the left shoulder here. All right, we already did have a right shoulder here. All right, but it's going to come back and retest that 516. All right, so worst case scenario. All right, so let's say Monday morning things look still pretty bleak, right? The momentum's not catching on. They're fading every bounce. I think we're going to gap down on Monday morning, okay, to about 507 to 508. I think that'll be the lows of the week. From a technical perspective, we are starting to get very deeply oversold, especially on the 4-hour as well. All right, so they're going to swing this down and gap us down into a very good support level to induce more bears to be short. And then what's going to happen is that we're going to come right back up. We're going to snap back into the 513 area. And the reason why I say the 512 or 513 area, that's going to be kind of midweek high. And also given there's no big data going into the first part of the week. All right. So the critical piece about Monday and Tuesday is that can we get back into this former support, which is right around the 512 area. We saw how the 512 and the 513 broke down on us. And this was a big chop zone after the big CPI dip. And then PPI saved the market, right? So it's likely we're going to come right back into the 512 to 513. And we're probably going to stay sideways leading into the tech earnings on Thursday, with jobless claims coming in on Thursday morning, Netflix, okay? And I do believe by the end of Friday or by Friday, you should see that we're right back to the 516, creates a right shoulder, and we'll go from there. So that's the plan as of right now for the following week. I mean, obviously anything can change. This is not a concrete. We'll see what happens on Monday, but I do think we're going to gap down on Monday, and it'll be a kind of a fake gap down. Keep in mind also SPX, because of today's gap down, all right, you have a major gap at the 5,200, near the 5,200 level as well. So you can see the last 30-minute candlestick was pretty solid, holding the 5110, 5111, basically 510 area of the SPY. All right, and you have a major gap that needs to get filled here. All right, something to keep an eye on over the course of the next couple of weeks is, or over the next week, is that while those index performed poorly today, but look at what's going on with the Q. The Q is at 438, and that's not terrible. Things start to get really, really bleak below 434. So what you want to watch for is that the 434, even if we gap down on Monday, if that 434 can hold, if it does, you can see another bounce here. And you don't, of course, still assuming that there's no U.S. troop involvement in Israel or anything like that, and that things don't escalate further than it already has. Over on the Q, though, it's still holding the 50-day moving average. You can see over the course of this entire week, it's actually held above the 50-day moving average. So that's pretty strong support. And so is SPY holding that 50-day moving average. Apple has outperformed on the week, rejected by the 50-day moving average this morning. All right, but still 2 heavy volume days on Apple. So you're starting to see there's sell-off on the index and some of the major other tech companies, but Apple has performed relatively strong, very strong actually, over the last couple days. I want to remind our viewers, what we said going into this week. And we were spot on. Unfortunately, I did not play enough puts or put enough on the downside to capitalize on the big move today. But, last week, coming into this week, we said that, okay, you had these tech companies already creating 52-week highs or record highs. All right. We saw Google today. Google hit 162 nearly, which is an all-time high. All right. For this morning too, while the markets gapped down and they sold that off. Amazon, we said will actually hit above 188 this week, and it actually did. So the high of the week was 189.77. So we said all these things that this was the reason for some bearishness going into this week. VIX was an uptrend. All right. Your gold is setting new record highs once again. Oil is going back up. And of course, that conflict between Israel and Iran that we kind of we knew about last week, finally hit the nail on the head this morning. And finally, it's, the situation escalated. So with that being said, real quick on the 4-hour chart, all right, this is kind of the line in the sand, all right? I know that most likely we're probably still going to gap down on Monday, probably 508, etc. Maybe hit some, and it's going to come into some critical support here, and your 4 hours getting reset here. In addition to that, remember that the 30-minute strategy here is that your 50 EMA and 10 EMA is actually the market just caught up to the 10 EMA at the close here. So you got too much white space, and that 50-day EMA on the 30-minute is actually at 514. And thus, this is what I'm saying. We're going to snap back, and we should snap back if no bad news over the weekend, not terrible news anyway. We should snap right back into this 513 to 514 area. But still, my upside target would be 516 going into Friday. All right. With that being said, hope you guys had a great week. Have a great weekend. God bless you guys. And